Hi, I'm Craig Brelsford, and welcome to another episode of Small Stocks, Big Money. For those of you new to the show, RedChip is an investor relations, media, and research firm focused on emerging growth companies. Our unique platform combines global multimedia with traditional investor relations, reaching investors around the world. Now, today's show features interviews with an executive of one public company and a NASDAQ contributor. First up is BIOVIE. BIOVIE, NASDAQ BIVI, is a clinical stage company developing what it believes will be transformative therapies to overcome unmet medical needs in neurodegeneration and liver disease. The company is developing NE3107 for Alzheimer's and Parkinson's and BIV201 for refractory ascites and HRS-AKI. We'll learn more when we speak with the CEO later in the show. Up next is our interview with Martin Tillier. Martin Tillier spent years working in the foreign exchange market, which required an in-depth understanding of both the world's markets and psychology and the techniques of traders. In 2002, Martin left the markets, moved to the United States, and opened a successful wine store. But the lure of the financial world proved too strong, leading Martin to join a major firm as financial advisor. We'll learn more when we speak with Martin later in the show. Now, before we get to the first interview, our quote of the week, it comes from the book Small Stocks, Big Money. I've made my money by being the first in markets. As a venture capitalist, you have to seek out the cutting-edge companies. You get in as early as possible. That way, you make a lot more headway and profits. This quote comes from John Papajohn, venture capitalist, featured in Chapter 6 of Small Stocks, Big Money, a book of exclusive interviews with some of the biggest players in the microcap space. Get a digital copy on Amazon today for just $18. Now, let's move on to our first interview today with BIOVIE. Hello, today we have Cuong Do, President and CEO of BIOVIE, which trades on the NASDAQ under the ticker symbol BIVI. Cuong, thanks once again for being with us.
Craig, thank you so much for having me. Great to be with you.
BIOVIE, Cuong, a clinical stage company with multiple late-stage programs targeting neurological and neurodegenerative disorders, as well as advanced liver disease. Let's start with a brief overview of BIOVIE for those that might be unfamiliar with your company.
Well, BIOVIE has two assets in the development right now. Our lead asset is NE3107, which in the clinic has shown that it can reduce inflammation and the associated insulin resistance. For Alzheimer's patients, they have experienced improvement in cognition and function. For Parkinson's patients, they've experienced improved motor control, as well as 3107 has been able to show that it can reduce something called DNA methylation, which is effectively a changing or biological aging process. In addition, we have BIV201 in the clinic starting a phase 3 program for ascites, which is late-stage liver disease.
Cuong, could you update us on the status of the phase 2B trial for NE3107 as a first-line monotherapy for Parkinson's disease?
Yes, thank you for that. That is actually our highest priority program. We conducted and completed a phase 2A in Parkinson's last year. And what we found in the phase 2A are Parkinson's patients that were given 3107 and levodopa saw a significant increase in their degree of motor control compared to those that were given just levodopa alone. Based upon those results and the results that we had in preclinical work in non-human primates, our experts really advised us to change our priorities. So instead of going first with 3107 as combination with levodopa, they urged us to go with 3107 as monotherapy and as first-line therapy. And they're absolutely right for all the reasons that we can go into later. So our plans is to initiate a phase 2B trial for Parkinson's patients this coming summer. This trial will give 3107 alone to Parkinson's patients who now need to have therapy for their symptoms. So we hope to have that trial started later on this summer, and we target having top-line data results early part of next year, perhaps middle of next year. This is a relatively simple and short trial and small to be conducted. So that's our number one priority as a company.
You've reported encouraging trending data from your Alzheimer's program. Talk to us about your plans for an upcoming phase 3 study in mild to moderate Alzheimer's patients.
In a trial that we unblinded late last year, we saw that patients treated with 3107 experienced a 68% slowing of cognitive decline compared to patients treated with placebo on a metric called CDR-SB, which is a common metric to assess cognitive decline. What's so significant about that was 68% slowing of cognitive decline over 6 months of treatment. To give you a context, you may have heard about the drug Leqembi from Eisai that was approved by the FDA last year. That drug showed a 27% slowing of cognitive decline after 18 months of treatment. Now, this is not meant to be an apples-to-apples comparison because you can only do that in a single trial, but it gives you some comparative information on what's the magnitude of impact 3107 has. In addition to CDR-SB, we looked at a number of other functional and cognitive measures as well. And on all of those, 3107's treatment advantage over placebo was quite significant, comparable to or greater than what's been shown for the other drugs. But unfortunately, we did not have enough patient samples in that trial to have statistical significance. So our plan is to go and conduct a phase 3 trial with 3107, so with two co-primary endpoints of CDR-SB and something called ADAS-Cog. Our plan is to start that trial in early to middle of next year, so early to middle 2025. And the reason why we're delaying that a little bit is, frankly, it just takes a little bit of time to start a new trial. But primarily, we want to use a new formulation, a once-a-day formulation of 3107 that we believe will help patients increase their drug adherence, right? And this is very helpful for a population that's inherently forgetful to begin with.
BIOVIE is preparing for a phase 3 trial for BIV201 targeting refractory ascites. What can you tell us about this program and its next steps?
Yes, what we saw in our phase 2B was significant efficacy for the drug. We were targeting to enroll 30 patients in this phase 2B trial, but we terminated the trial halfway through. We already had statistically significant data showing patients treated with BIV201 experienced a 50% reduction of their ascites fluid buildup compared to no change for the standard of care. Given that this is a condition that has 50+% mortality rate within 12 months, we concluded that the only responsible thing that we can do as a company is to stop the trial early and engage the FDA in a conversation on how to move it directly to phase 3. You may recall that BIV201 has already received orphan and fast track designation. As such, we only need one phase 3 trial for registration. And as of now, we have received the feedback that we need from the FDA to move it to phase 3 trial. And given where we stand in the company, we are putting this program on hold until such time as we have a partner identified that's willing to fund it or co-fund the program with us. And we are in conversations with several companies regarding that right now.
Kong, you recently completed a financing round that raised gross proceeds of $21 million. How far will those funds take you?
The funds that we recently raised, in addition to what we already have in the bank, will allow us to go and initiate the phase 2B for Parkinson's. Like I said, that is our #1 priority, and we believe that's enough to get us the data that we need early to middle of next year on the impact of 3107 as monotherapy, first-line therapy for Parkinson's patients. Everything else is essentially on hold until some additional funding comes through. And we believe we will have some additional funding. We have some grants that are underway, and we're exploring partnership conversation as well as some non-dilutive funding options as well.
Now, Kong, could you give us the essential value proposition? Why should investors take an interest in BIOVIE right now?
BIOVIE is one of the most exciting portfolio, I believe, that exists in biotech right now. We are working on some of the most difficult conditions out there, right? Alzheimer's, the last unsolved, great unmet medical need. Parkinson's, in 3107, we believe we could have the first new therapy for Parkinson's since levodopa was introduced over 50 years ago. And in BIV201, we believe we could have the first therapy for ascites. right? So we believe we have a great portfolio. We also represent a great buying opportunity right now. So for shareholders who recognize the value of our science and who have the patience within the course of the next year or two for the data readouts on these trials, we believe we represent a great buying opportunity for those who invest in the long term.
It's always a pleasure talking to you about your exciting company, Kong. Thanks for the updates.
Craig, thank you so much for having me here.
Now, to get more information on BIOVIE, visit biviinfo.com. You'll see research reports, fact sheets, presentations, and the latest videos. It's all free, and you can even subscribe to email alerts to stay on top of the latest news. You can also call 1-800-RedChip to speak to a specialist if you have any questions. We also have a free weekly newsletter you can subscribe to at redchip.com, featuring emerging growth companies like BIOVIE. And be sure to sign up for our weekly newsletter and learn about a lot of small cap companies. And also go to our website and sign up on our events page for the webinar series. We have webinars every week, several a week, in which we feature small public companies, mostly client companies, and you'll hear straight from the CEO, and you'll be able to ask questions after that. Again, visit redchip.com and subscribe today. In addition to our newsletter, you can order Small Stocks, Big Money. This is a book written by RedChip CEO, featuring interviews with some of the biggest players in the microcap space. Get a digital copy on Amazon for $18. Now, let's move on to our next interview today with Martin Tillier.
Martin, thank you for being with us today.
You're very welcome. It's a pleasure.
Thank you. So you've spent many years working in the foreign exchange markets, a very deep understanding of Wall Street. You have an in-depth understanding of both the world's markets, psychology, and techniques of traders. Martin, tell us a little bit more about your background.
Yeah, I've worked in a lot of places. I've worked all over the world, basically London, Tokyo, Moscow, Warsaw, shouting and waving my arms around, doing all the stuff that you do in dealing rooms. And then as time went by, I did a short time as a financial advisor for a major Wall Street firm, found that a bit constrictive, to be honest, and ended up just through accident, through an accidental process, writing for NASDAQ.
Martin, in fact, you just published an article on NASDAQ where you articulated a very compelling case for investments in small cap stocks, and you looked through the lens of Bob Farrell and his principle of market mean reversion. In a sentence or two, tell our viewers, what is market mean reversion?
Well, it just means that in markets, everything does revert to the mean, to use that same phrase, meaning that if something's been outperforming for a while, it will probably pull back. And if something's been underperforming for a while, it will almost certainly do well for a while.
Martin, elaborate on the factors that make this moment particularly ripe for investing in small caps.
Well, I think it's to do with the underperformance. People are worried about underperformance over the last, I would say, probably the last 5 years. But in actual fact, if you drag out a chart and you look at small caps versus large caps over the last 20 or 25 years, there's a massive outperformance. If you just take the ETFs, IJR, the largest small cap ETF, has outperformed SPY, the S&P 500 tracker, since 2000. It's almost doubled the return. And that's going to happen again. So the fact that there's been some underperformance is actually makes this time an opportunity to invest in small caps, not a reason not to.
Makes perfect sense to me. Talk to us about market cycles and how investors can better understand and navigate them, and particularly when they're focused on small cap stocks.
Yeah, I think we are programmed as individuals to do things the wrong way. It's one of the first things you learn in a dealing room is that as people, we are inclined to ignore to ignore the bad things and want to join in with the good things. That's great in life, but it's terrible in trading or investing. In trading or investing, you have to do it the other way around. When things are going bad, Warren Buffett's famous phrase and all of that, when things are going bad, that's the time you need to get involved. And when things are going good, it's maybe time to pull back a little bit. And if you put that in the context of small cap versus large cap stocks, now's the time to be in small cap, right? Because there is this inevitable cyclicality, and we're at this point now, and we're heading towards this point. And it may not come tomorrow, and it may not come next week, and it may not come next year, but it's coming, and you need to take advantage of it now, and then ride with the inevitable flow of markets.
Well said. Now, are there any recent developments that either reinforce or challenge this view?
Yeah, I think that current market conditions, everybody's obsessed with what the Fed's going to do, which is understandable. It's important right now and everything, but rates have spiked quite sharply from ultra low levels, historic lows, and that feels to people like it's going to be disadvantageous to small caps because inevitably smaller companies' interest rates are a little more interest rate sensitive, and so the feeling is that's bad. But what we've actually done is revert again. If you look at a reversion to the mean, we're back to kind of long-term averages, if that. There's still a move, though, within the next year or so for rates to be cut back again. As that happens, again, that's a plus in everybody's mind for small caps. You need to be in front of that move. You need to be there now when everybody's kind of humming and hawing before that actually happens.
I agree. We've seen a number of significant moves on our RedChip stocks just over the last couple of months. And so I agree with you. Small caps are back in play. But let me ask you, how do investors sort of minimize the risk of small caps? Because as you know, many of them don't work out. And so do you have any particular strategy on how you look at a small cap stock?
Yeah, let's get one thing out of the way first, and I'll jump on one of my hobby horses very quickly. Risk and volatility are two different things. Financial advisors are taught to tell you it's the same thing, that if something's volatile, it is therefore risky. But that's not true. There was far more risk investing in treasuries 5 years ago or 3 years ago when rates were essentially at zero than there was in buying a small cap biotech stock that had potential. The small cap biotech would be more volatile, but it was volatile in an upward trend, whereas there was no upward path for bonds when interest rates were at zero. So bearing that in mind, but there is that volatility and there is some risk associated with small caps. But like all things investing and trading, diversification is your friend. You have to embrace that volatility. And the way to do that is if you put all your eggs in one basket and something goes wrong, of course, it's terrible. So you don't. But the potential of small caps is such that you only need 1 or 2 out of 10 to go your way. So my strategy would be to diversify multiple stocks and to actually be disciplined about the ones that don't go as planned. You can't just sit there forever and wait until it goes to zero. You have to have a point at which you're going to get out of that and say, okay, I'll rethink it. I'll come back to it later. Just take the emotion out of it, cut yourself out and go. The others that are working, let them go. It's the oldest trading adage there is, cut your losses and run your profits and you'll still have a job next week.
Well, that's an excellent overview. I always say buy small cap stocks in bunches, a cornucopia of stocks if you're going to play in the smaller cap space, because it is the riskiest asset class. So I think your strategy is very sound. I want to close with, are there any industries that you like in the smaller cap space or any stocks?
Individual stocks at the moment, there's a couple of bits and pieces. My main focus right now, because I'm looking for areas where there is enormous growth potential. Obviously, the tech side to a certain extent. There's lots of AI-related plays out there, where I look most of all tends to be in the biotech and healthcare sector, where there are just enormous advances taking place that can change people's lives, and for the better. And I know you kind of feel this way too. One of the big pluses of investing in small caps is that you can be an agent of innovation yourself. You can drive these things forward. And when these things actually save people's lives and make people's lives better, that's something that you can do. When I first started in the Forex market, I was told by my boss that I would find the hardest thing was that the only thing we made was money. And that can be hard for some people, but there's no reason why you can't do good while you make money. And that's why I kind of tend to look at the moment more at biotech than anything else. But, that's me. It's not for everybody.
And Martin, I appreciate your insights. Look forward to having you back on the show soon. Have a great day out there.
Thanks, you too. Good luck.
Now, to get more information on RedChip, visit our website, redchip.com. You can also call us at 1-800-RedChip to speak to a specialist if you have any questions. We also have a free weekly newsletter you can subscribe to at redchip.com featuring emerging growth companies. Now, be sure to sign up for our weekly newsletter and learn about a lot of small cap companies. Also, go to our website and sign up on our events page for the webinar series. We have webinars every week, several a week, in which we feature small public companies, mostly our client companies, and you'll hear straight from the CEO, and you'll be able to ask questions after that. Again, visit redchip.com and subscribe today. In addition to our newsletter, you can order Small Stocks, Big Money. This is a book written by RedChip CEO, featuring interviews with some of the biggest players in the microcap space. Get a digital copy on Amazon for $18. Now, let's recap the companies featured today. First, you met BIOVIE, stock symbol BIVI on the NASDAQ. BIOVIE is a clinical stage company developing what it believes will be transformative therapies to overcome unmet medical needs in neurodegeneration and liver disease. The company is developing NE3107 for Alzheimer's and Parkinson's and BIV201 for refractory ascites and HRS-AKI. Learn more at biviinfo.com. Then you met Martin Tillier. Martin has spent years working in the foreign exchange market, which required an in-depth understanding of both the world's markets and psychology and techniques of traders. In 2002, Martin left the markets, moved to the United States, and opened a successful wine store. But the lure of the financial world proved too strong, leading Martin to join a major firm as a financial advisor. Don't forget to check out our stocks page. It's the biggest small cap stock portal in the industry. Every company listed on the NASDAQ or New York Stock Exchange with the market caps of $2 billion and less. And it's categorized by industries. And be sure to sign up for our weekly newsletter and learn about a lot of small cap companies. And also go to our website and sign up on our events page for the webinar series. We have webinars every week, several a week, in which we feature small public companies, mostly client companies, and you'll hear straight from the CEO, and you'll be able to ask questions after that. Again, if you have any questions about any of our public companies featured on today's show, call us at 1-800-REDCHIP or email us at info@redchip.com. In closing, remember, while small caps can provide significant gains, you must be prepared for the downside. Small cap stocks are among the most volatile of asset classes. Some of the companies featured on this show are RedChip client companies, and we may own stock in these companies, so please, always read our disclosures at redchip.com. Thanks for being with us today. We'll see you next week with some new, exciting, emerging growth companies.
Hi everyone, my name is Oren Hershkovitz. I'm the CEO of Enlivex Therapeutics. I'm an immunologist by training and more than 15 years experience in running clinical development companies. So let me give you a brief overview over Enlivex. Enlivex is a public company traded in NASDAQ under the ticker symbol ENLV. So quick overview, Enlivex is a cell therapy, what we call the next generation cell therapy companies. We have an off-the-shelf cell therapy that know how to reprogram macrophages and by that restore immune homeostasis. So macrophage is a key regulator of the immune cell, very, very important immune cell. And in some diseases, this specific cell becomes part of the pathophysiology of the disease. It becomes part of the problem of the disease itself. And we at Enlivex, using our cell therapy, we know how to reprogram that cell, bring it back into normal activity, and by that to resolve the disease condition. Now, we have an open program in sepsis, which is the third leading cause of mortality globally, a huge unmet medical condition with a market size of about $33 billion. Now, with no good treatment. It's really an unmet medical condition, and that's in that program we have a advanced phase 2 study that we already completed the recruitment for that study. It's a randomized controlled study and top-line data from that study is expected by the end of this quarter. On top of that, we have open programs in osteoarthritis, which is again a huge unmet medical debilitating condition. Chronic pain in your knees and other joints. And Livix has developed allocetra to treat that specific condition. We have 2 open clinical studies. Data will come out from those studies during 24, and top-line data from a phase 2 randomized controlled blinded study, which is statistically powered to show significance in pain compared to baseline and control group, will be available by mid-25. So to summarize, Livix, publicly traded on the NASDAQ, we have a very experienced management team that already did in previous companies collaboration and huge deals, exit deals with Pfizer. We have a very unique modality, reprogramming macrophages, and by that treating unmet medical conditions, several huge indications, large market size with really unmet medical conditions, when we think our platform could be a game changer. And that's why I think we're a very interesting opportunity. On top of that, we have 30 million in cash, which will take us all the way to at least the end of 25. And during that time, we're expecting to execute all the inflection point that I've mentioned during this talk. If you want to learn more, please go to enlvinfo.com. Thank you very much.